Hello, everyone. Good morning, good afternoon, or good night, depending on where you're calling. I'm Yaniv Feldman from Geek Time, and we're hosting this call about Segwit2x alongside with my partner Lou Kerner from Flight Ventures. On this call, we'll have Alex Marcus, the co-founder of Chainco Labs, and Mike Belshi, CEO of BitGo, talking about the opposite sides of the Segwit2x fork, for and against. They'll explain exactly, what's going on, how it's going to work, and the reasons for supporting or not supporting the fork. And after each of them will talk, we'll have about 30 minutes of Q&A. If you do have questions during conversation, you can type them on the question box on the right side of your GoToWebinar dashboard. So feel free to do so, and we'll try to answer as many of them as we can before our time ends. So with that, I'll go over to Alex. Alex, the stage is yours.
Okay, thanks. Let me just see if I can get this screen sharing. Is that working?
Yeah.
Okay, hi everyone. I'll just give a brief background and then I'll dive right in. I spent about a dozen years doing high-frequency trading, co-founded Hudson River Trading in 2002. And then about 5 or 6 years ago, decided I was ready to move on to something new. And that's when I found Bitcoin. And ended up co-founding Chaincode Labs with one of my partners from HRT, Suas Daftoir, and we've hired a few developers, and we spend most of our time contributing to Bitcoin Core. So I'm going to talk a bit about some of the issues.
Hey, Alex, I'm sorry, it's Lou. Can you just explain just a little bit when you say contributing to Bitcoin Core, what that means?
Sure. So the Bitcoin protocol is enforced by software. There are many different implementations of the software which are trying to enforce the same set of rules, but historically, by far the most common implementation has been Bitcoin Core. It's an open source project. It's the same code base that Satoshi started 8 years ago, and anybody can contribute to it. When Suez and I started, we just started watching the activity and reviewing other people's pull requests, and anybody can go check it out on GitHub. It's github/bitcoin/bitcoin. Okay, so I'm going to talk a little bit about the 2x plan, the problems I see with it, why there's a No2x movement. But then I'm also going to talk about why I think at this point that's not really relevant anymore, because I think the 2x plan has already failed. So I'd like to start with a description of Bitcoin. Decentralized, incorruptible, censorship-resistant money. And the word I want to focus on today is incorruptible. Similar to gold, Bitcoin is often, the analogy is made as digital gold. Gold has atomic properties that can't be changed. Unlike the US dollar, which the supply and the workings of are controlled by the Fed, gold can't be changed. And Bitcoin similarly has rules that are enforced by code. And there's no governing body that can control that. Everyone can enforce those rules for themselves. They're immutable. Unfortunately, the world isn't quite as simple as that, because from time to time we feel the need to change the rules. They're not perfect. Maybe there's a bug. Maybe we've learned more. And so the problem we all have now is, well, what should that process look like for changing the rules? And that's the heart of the current debate. So what's the No2x movement? Well, as I said, one of the major selling points of Bitcoin is no one controls it. And with the 2x plan, there's some opposition to the actual technical changes of the plan, to either the timing of them or how they're implemented or whether they're necessary now. But the real crux of the problem is there's a much, much larger opposition to the process that 2x has undertaken. So what are those objections? For starters, it was orchestrated by a small group of people behind closed doors. There was a meeting in New York in May where people sat down and signed the agreement. This is a meeting I was invited to, as well as a couple other core developers, but we refused to attend because we don't think that's the way Bitcoin governance should work. More importantly than the type of meeting was the product of the meeting.
Alex, just again to give more, how many people were there, and as opposed to having a meeting, what are kind of your thoughts on a better way that they should have done that?
I'm not sure how many people were in the meeting because I wasn't there, but on the order of 15 to 20, I think. And then there were other people that signed on. I mean, I think we've all seen the statement that there's at some point 50 companies signed on to it, but I don't think all those people were there in person. I'll touch briefly later on you know, kind of what I think a better approach is.
Perfect.
But aside from like the meeting or who was invited or whether it was on TV or behind closed doors, the bigger problem is what came out of the meeting. The product of meeting was not a proposal for how we should scale Bitcoin. The product was a declaration that the signers of this agreement were going to be changing the rules at a certain time in the future, and that was going to be the Bitcoin that they were running. So there was no consideration for building consent from the community. When it became clear there was opposition from the community, that opposition was sort of brushed aside and they continued with their intent to proceed anyway. And then once the project got underway, the other problems became apparent. There's a relatively opaque development process, and the goal was, the project was structured in such a way that it was kind of all or nothing. Instead of creating a type of free market choice, a little bit like Bitcoin Cash has done, but by not having any type of replay protection, it makes it very hard for both chains to coexist at the same time. So there's kind of like a winner-take-all approach.
Can you explain a little more about replay protection for our listeners that don't know the concept?
Yeah, so when the fork happens, everyone that owns Bitcoin is now going to have two kinds of Bitcoin. Bitcoin on the old rules and Bitcoin with the new rules. And so you can make a transaction that's valid on either one of those chains. Now with Bitcoin Cash, there's no way to make a transaction that would be valid on both chains. You either construct the transaction in a way that's valid on one chain or it's valid on the other. And so that allows you to control those two separate assets separately. But with the way the 2x project was done, all transactions are valid on both chains. So you don't really know, if you intend to transact on one chain, whether you will succeed in transacting only on that chain or your transaction will be valid on both chains, and it makes it kind of hard to split your assets and deal with them differently. I'll get into a little bit later what some of the problems that could cause.
Yeah.
So I want to leave you this quote about the process, because I think, Mike might push back a little on this and say, well, no, we do have an open development process, and this is really a proposal. It's not a declaration. But if we read what Jeff has written here, as a matter of policy, to join the list, you need to agree to research, build, test, review, deploy, according to the New York City Agreement's public 2-point charter, Segwit plus 2 megabyte hard fork in less than 6 months. This was a response to developers trying to join the mailing list after the 2x project was announced. Now, let me be clear, they changed this policy. The mailing list is now open. That happened in July after repeated public criticism of the way they were doing things. But this shows a little bit the mindset of how this is not, I think, the proper way to run an open source project, to run a governance for an open protocol, or certainly for something that's a money that should require everyone's consent. But you don't have to take my word for it. This list of issues is from the Brazilian and Argentinian Bitcoin communities. And I think if you, I won't read all these, but if you take a quick look at those, you'll see they mirror some of the same concerns I just brought up. So you asked what a better way to do things is. Well, let me start by saying that I don't think we know. I think Bitcoin is new, and we're learning how it should evolve. But I think we can take some clues from the IETF about how to build consensus. I think we should be clear that this is not like a majority rules type situation. We have to preserve that property that people feel like the rules can't change out from under them. And in particular, political negotiation isn't really the right approach either. We should be striving for the best technical solutions, but also ones that don't have any strong objections. Consensus is the absence of sustained opposition. Okay, so let me switch now. I've talked about some of the problems with 2x, but I really don't think at this point that matters, because I'd like to demonstrate that I think 2x has already failed. And I'm going to point to sort of 4 kinds of data. First, we have polling data. So I'm sure everyone looks at Twitter polls and can think to themselves, this doesn't seem very scientific. And it's not. But that doesn't mean there's no signal. If you look at the 2 polls on the right, they have both about 5,000 votes. Both are strongly indicative of opposition to the 2x fork. And the poll on the left is particularly interesting because it actually required you to respond by attaching your Twitter identity and putting a comment, a reply to the poll. There were 1,800 responses. The vast majority of those were either yeses or nos, but there were only about 80 yeses. So, those are 2 data points where you have 2 types of data points where you have overwhelming support against the fork. And Jeff Garzik has been quoted as saying 100% of these polls are either selection bias or paid. Well, he said 100% because we don't see any polls in the other direction. And I think that's the key. Maybe any given poll isn't really a scientific piece of evidence, but taken together, you would expect there to be at least some polls that were biased in the other direction, so to speak. But we don't see that. We see only polls in one direction. At best, you see some that are about 50-50. But let's leave the world of the internet and go to in-person, real people, local meetups. In the last week or 2, we've started to see statements come out of some of the local meetups. Our staunch opposition to this November's proposed hard fork, Seoul, that has over 1,600 members in that meetup. A contentious B2X hard fork is dangerous, Munich. Stand in opposition to Segwit2x, Brazil, Argentina, Madrid. Segwit2x hard fork does not in any way enjoy such consensus, Israel. We resolutely oppose the Segwit2x hard fork proposal, Hong Kong. I just don't think there's any way you can claim there's consensus or overwhelming support for a proposal when you have these big in-person meetups of people that really care about Bitcoin coming out in opposition to it. And I don't think there's a single one that has come out in support of it. So that's the second piece of data. Let's look at nodes on the network. So the Bitcoin network is made up of what's called a node, which is a computer running the software that validates transactions in the blocks. That's like I said before, Bitcoin Core is the sort of dominant piece of software. So this chart here is looking at just nodes that accept incoming connections, because those are the easiest ones to measure. There are about 10,000 of those total, which is about approximately 1/10 of all the nodes. There are about 100,000 full nodes out there that are validating everything. And that's really why Bitcoin is your money, is because you can validate it yourself. And so if you look, this is a graph of this year, up until about 5 days ago. And you can see that as of today, there are about 7,000 nodes running core software, and about 400, well, 5 days ago there were 400, I think there might be 600 or 700 now, running BTC1. So maybe you say to yourself, well, they're the new guy. Like it takes some time to build up an installed base. So instead, let's just look at the two most recent versions. BTC1 released their software on July 21st. Bitcoin Core released the 0.15 version on September 14th, almost 2 months later. The light blue shading at the bottom is BTC1 adoption. The purple and gray are two versions of 0.15 Bitcoin Core software. So people that are choosing to upgrade in the last 3 months are overwhelmingly, or I should say choosing to bother downloading and running software, are overwhelmingly choosing to run Core software. And the final piece of information I wanted to point to is the markets. In the last 2 weeks, we've seen 3 exchanges list essentially futures on what the two coins on the 2 exchanges would trade at. You expect that the price of the 2 futures to add up to 1 Bitcoin, because right now, if you start with 1 Bitcoin, you'll have 1 on each chain after the fork, and they do. The prices on all 3 exchanges are roughly similar, and this is a graph of Bitfinex the last 2 weeks, and you can see that the BT2 future, which is or they call it a chain split token, which represents the Segwit2x chain, it's been trading for almost the whole time at about 0.15 Bitcoin. And the original rules is trading at greater than 5-to-1 spread over that. So here we have actually people that are willing to put their money on based on their position, overwhelmingly supporting the current rules. So I think you could look at any one of these pieces of data and have some sort of objection to it. But I don't think you could argue that you had overwhelming support from the community or a consensus of the ecosystem or whatever you need in order to change the rules of everybody's money and have all 4 of these indicators pointing firmly in the opposite direction. If anything, this is showing very strong support against the fork, but we don't need to demonstrate strong support against the fork. What we need to demonstrate is that the fork doesn't have overwhelming support. It does not have the consent of the community to change the rules of their money. So if I'm so convinced that it's going to fail, then why do I care? Why are we having this conversation? Why does it matter? And that brings me to our last slide, which is the costs that have been put on all of us as a result of this. So we all know that this debate has been going on for years and years, but in particular this last 5 or 6 months with the 2x plan has been incredibly burdensome to the ecosystem. Without replay protection, every exchange, wallet, and service is separately implementing a way to treat the 2 assets so their customers can manage them separately. There's a limited ability they'll have to do that without consensus level replay protection. So there's potential for chaos and loss of funds, especially for SPV wallets. There's going to be some amount of brand confusion on what Bitcoin is. A lot of the exchanges are saying they're going to at least start by calling the current rules Bitcoin after the fork, and then they'll reevaluate if the market indicates that 2x rules are dominant or the hash power indicates or something. But why with something that has this little support ahead of time are we even considering changing the branding of Bitcoin? Institutional investors have been scared off. I've talked to them myself, and they're worried about the fork and what's going to happen. And this is just a lot of wasted time arguing over something that was never going to work anyway. And why do we know it was never going to work anyway? Because we've tried this before with XT, with Classic, with Unlimited. You can't have an agreement that dictates how the rules are going to change. You have to have a proposal that builds support for how the rules change, and we haven't seen that happen successfully yet. That's all I got. Thanks.
Thank you, Alex. Since Mike is running a little bit late and hasn't joined us yet, so let's start a little bit with the questions. If you can talk, I didn't see you mention the technical objections of No2X. So, for example, people were talking about the fact that increasing the block size, so fast after the Segwit fork could cause a lot of stuff. So, I'd like to hear a little bit about that.
Sure, I'm happy to. I think I did want to emphasize not the technical objections because I think that's more important here is the process and the precedent. But you can ask yourself, well, if there's no good reason for anybody to be opposed to this at all anyway, maybe we're making this argument out of nowhere. But I think there are good reasons to be opposed to it. So for one, you could make an argument that we wouldn't have Segwit if we hadn't had the New York agreement. I don't necessarily agree with that. I think what caused Segwit to get activated was the fees were going up and we had the scaling technology ready and people were like, okay, well, I guess we really need it now. But that's beside the point. We have it now. We have a capacity increase that is in the process of taking effect as people are upgrading to use Segwit-capable wallets, as unspent outputs are getting moved from pre-Segwit to post-Segwit. I actually think this is a great way to add capacity because it would kind of be a mistake to have a shock to the system where all of a sudden the capacity just doubled and you no longer had enough transactions to even fill the blocks. So number one point is, well, it makes sense to wait and see once we already have one capacity increase that's in process right now. Number 2 point is a little bit about the lesson we're learning about how Bitcoin scaling should work. And that's the problem is there's an array of views on the other side, and some people are probably very reasonable and think, well, why don't we just have a very small block size increase now while we buy time for other layer solutions to develop? But other people think that increasing the block size is the way scaling should always work, and that we can put everything on chain. And it's okay if at the end of the day only a few nodes are run in data centers and individuals aren't running their own nodes. And so we're setting a kind of important precedent here, and that was started by the very first scaling solution being a factor of 20, not a factor of 2. So that's where we started from, and on top of that, we don't want to the viewpoint that if the blocks are full, that's bad, that means we've run out of room and we need to make them bigger. I think that's just fundamentally wrong. I think the design of the system is that the blocks should be full, it should be a limited resource. I mean, that's certainly a point Jeff used to make himself a lot. So I don't know, does that answer your question, some of the technical objections?
Yeah, one of the things that people are afraid of is what's going to happen. We spoke about it a little bit earlier about replay attacks. Can you tell us maybe what would be the best way to protect ourselves from such attacks, assuming that the BTC1 team will not implement a replay protection eventually?
Yeah, I mean, I think at this point they've made it clear they're not going to implement replay protection. So there are several ways that people can try and implement replay protection themselves. It all comes down to making the transaction that you're spending only valid on one chain. But if the format of transactions is the same for both chains, the only way you can do that is including something that you're spending in the transaction that isn't available to spend on the other chain. So one way to do that is wait for 100 blocks to have been made on one of the chains, and then the first Coinbase that was made, that Coinbase is obviously only valid on that chain. So if you try and spend a part of that in your transaction, that transaction will only be valid on that chain. But you could also do sort of other best efforts type things where you can issue a transaction, and as soon as it's been accepted on one chain, maybe try and replace it with a different transaction and get a different one accepted on the other chain. That's just luck, whether that happens or not, but maybe you're paying yourself and so you don't really care if it happens or not. But once it's happened once, then you kind of have two different outputs on the two different chains. You can basically use these to sort of pollute your other unspent outputs with outputs that are only valid on one chain or the other and aren't fungible between them.
Okay.
So I think right now all the wallets and services and exchanges are writing code. It sounds like a big mess because it is a big mess. And they're all writing code to do this themselves, and undoubtedly they will mess it up.
So another question we got was, comparing the fork right now back to the fork in August, the original Segwit fork, how do you see the differences between what happened then and what happens now?
Well, I think what happened then was very different. First of all, I wouldn't call it the original Segwit fork. We don't actually have a fork from the original Segwit. That would be a chain that did not have Segwit and had a 1 megabyte rule. I think that's, some people say, well, Segwit didn't really have consensus and we enforced those rules. I think to some extent that's an indication that it kind of did have consensus, is that nobody stuck with the pre-Segwit rules. Also, something about the Bitcoin Cash fork that happened on August 1st is it was sort of it was only announced quite shortly. Like, there was not much was known about it. It was announced on a short time scale. It wasn't really meant to be, I mean, I don't know. I did not perceive it as there was this big debate about which side of the fork we're going to take. It was just the desire to create another option. And I think creating another option is fine. I mean, maybe there's some argument about whether you should appropriate the name Bitcoin for your option, but at least they weren't trying to take the name Bitcoin by itself. So I think this is very different. And there's some issues about whether we saw some problems where a lot of the miners went over to Bitcoin Cash. I think at one point 50% of the hash power was on Bitcoin Cash, and so then we saw Bitcoin blocks slow down a little. That problem has gotten less and less bad as the price of Bitcoin Cash has gone down and down and down. But I don't think those things are overall good for the health of Bitcoin. I mean, why should somebody trying their own independent experiment cause disruption in block finding on Bitcoin? Doesn't mean they're ethically wrong, but I think as a community we should probably learn to not put value on these forks when they impair the value of the remaining Bitcoin.
Yeah, I remember that in the last, I would say, maybe month or so, we saw different different issues with complexity on the network. We saw blocks that take up to like 3 minutes, and then blocks that are taking like 10 hours to complete on the cache network. Do you think something like that, they're not adjusting difficulty rate this time, but do you think something like that is due to happen again here?
Yeah, I certainly think it's possible that if you have a big difficulty adjustment, and even with the existing difficulty algorithm, you can have a factor of 4 adjustment. That can cause quite a rapid shift in how quickly you're finding blocks. I tried to model out a little bit myself what happens if you have 2 forks that are kind of in the same ballpark of price and in the same ballpark of initial hash power. And I think it could be quite messy. I mean, I don't think that's a very stable position to be in. I think it's pretty unlikely. I think both sides of this debate would say that's pretty unlikely, that there'll be a pretty clear winner, hopefully sooner rather than later.
Okay. One of the things that a lot of the people in the community are interested is the effect of all these forks on the value of Bitcoin as a currency, as a store of value. And you saw on your own presentation, what happened with the futures for B2X, and we saw what happened with Bitcoin Cash. But we're now also starting to see all these, non-correlated forks like gold, and now I think today or yesterday there was also Bitcoin Silver announced, and they're becoming more and more coins that are trying to not grab the original Bitcoin name, but use it in order to gain some momentum. So what's your perspective on that?
My perspective is there's no such thing as free money, and I think that it's not that dissimilar concepts to, I can just launch a new altcoin and it has all this value and I made myself rich, or now I can launch a new ICO. I think we're incurring a cost there. Maybe we're not seeing the cost right away. Maybe the cost is damage to the Bitcoin brand. Maybe the cost is the people that lose money investing in these alternative versions are going to create negative reputation. I don't know, but I think it's probably likely that Bitcoin Cash was worth 15% and now is worth 6%. Bitcoin Gold looks like it started at 2%. 2X is maybe a little different than Bitcoin Gold. I don't think it's going to start as low as 2%, but it probably will quite rapidly approach that. And I don't think you'll ever see other forks, unless they're like a sort of serious event, that start with any kind of significant value again. I just don't think it doesn't make sense to me that we can just fork it and it's worth billions of dollars. That doesn't make any sense.
Yeah, so we finally have Mike join us. Hi, Mike.
Hi, Yaniv. How are you? I'm so sorry for being sorry to everybody.
Hey, so we just had Alex, present their side, and we spoke a little bit about Segwit2x and its meaning. We'd like to hear, your side as a Pro2x supporter. First off, how do you see that the fork and the reasons that you think more people should support it? So the stage is yours.
Okay, thanks. And again, very sorry to everybody to keep you all waiting. So I mean, this story has its genesis about 3 years old now, and a lot of us have been, hoping this would resolve faster. I know Alex is in that camp as well. I've been at meetups and conferences over the last couple of years where we thought this would go faster, but it is what it is. So back in May, a group got together with the intent of trying to unblock Segwit, actually. If you recall, Segwit was at about 30% kind of miner signaling at the time. A big part of upgrading the capacity of the network in any fashion is getting agreement, consensus from everyone. I think that's why we're having this debate today. That includes everyone in the ecosystem. I mean, the miners are a role, the end users are a role, the businesses that are trying to make the community stronger is a role. So we're all part of that. And Segwit was struggling at that time, for better or worse. And so a group got together to try to unblock that. I think the motivations are simple and pure. Sometimes we're accused of being a bunch of businesses and having profit motives and all that. I assure you that whether Segwit2x goes through or does not, the profits of the businesses is not affected. We would like to see Bitcoin scale more and faster, and we think that's generally healthy for the community, but it's not a profit motive. Now, a little bit about me. If you don't know me, I've been in protocol standards for some time. If you look at the HTTP 2.0 specification, you'll find my name at the top of that from the IETF. So Bitcoin's a little bit different in how it gets protocol consensus, but a lot of the issues are the same. Now, the IETF is the Internet Engineering Task Force. They've been around for 40 years or so. They're responsible for pretty much all of the Internet protocols. Bitcoin hasn't moved there. Maybe someday it would. I think that might be a good idea. But consensus is important. Decentralization is critical. An ability for people to have a voice is important. But that doesn't take away from the fact that every good idea starts with one or two, and then they try to gather momentum. So anyway, in New York, a group got together, frustrated about the state of Segwit2x, looking to do something, and said, you know what, we've got two proposals on the table, and let's do them both. It wasn't a compromise. It wasn't saying, oh, okay, in order to make the miners happy, let's compromise. It's like, no, we actually really do believe that we would like to see the capacity increases of both forms go through. Now, at the time, we didn't know how contentious it would or wouldn't be. We were just trying to get the thing started. And also interesting to note is that this is the second time a group of folks, like-minded folks that wanted to see how to make Bitcoin scale, came up with basically the same answer. A different group of people, a year earlier, in what was named the Hong Kong Agreement, decided, hey, the best path forward is to do Segwit, and then follow that up with a 2 megabyte increase. So it's interesting in my view that 2 times you got 2 different groups of folks, and they kind of came up with the same answer both times. Now, just kind of coming up with the initial strategy, that's just step number 1. The next thing you got to do is you got to go follow that up with code and implementation and testing, and go get the rest of the community on board and all that. And so that's where we've been. Now, I suppose the path to get there has been fairly aggressive in time, kind of with a 3-month time schedule. But the reason we thought that could be fast is because this really isn't a new idea. I mean, as I mentioned, it's at least a year old, and the number of different ways to just increase the block size through the limit increase was not new at all. So that's where we've been. The good news is that Segwit2x, I think, did play a material role in helping unblock Segwit. The community certainly cheered and rallied as Segwit came live just a couple of months ago now. And then what's coming now is the second part of it. So often get a question which is, well, gosh, look at Twitter and look at Reddit. Look at how many people are not behind this. And maybe you should just call it off. Well, to them, I guess I would ask a slightly different question. And that is, if not this, then what? What we have learned from the debates of the last few years, and I think this is fairly, I think most of us would agree, it takes a long time to get any capacity change through. And when I say long time, I mean a couple of years. So if we don't have it kind of in code, if we don't have a really solid idea that's like getting through that process already, and I know there's Schnorr's algorithms and there's other things that are out there as lists of ideas to be done, but pragmatically, they're probably year plus away from shipping. This is one that we have, it's ready. We know what it's about. It's going to instantly double capacity. Although we've had Segwit, for a couple of months, because it's a more complicated rollout by way of needing every wallet and application to change. It's only seeing 5-ish% capacity increase so far. Kind of on a block by block basis, a little hard to measure. Some have had big block changes, about 20%, but most are 1 or 2%. So the block size increase will take effect immediately. It's available now. We've been through this for a couple of years, and it's ready to go. If we don't do this, we won't see another capacity increase for at least a year, probably 2 years, and I think that's a problem. I think we could do better. I think we have an opportunity to get it done now. Finally, the only real complaint about Segwit2x is process-based. It's just a 2 megabyte increase. People want to say that it's somehow indicative of further changes, that economic properties of Bitcoin are vulnerable. I don't think that slippery slope is realistic. If you do look at the folks that do support Segwit2x, you'll find people that have been in Bitcoin since the beginning. You'll find, Wences Casares, you'll find Peter Smith, you'll find Barry Silbert. These are people that have no intention to change the economic properties of Bitcoin. They love Bitcoin for what it is today, and they will fight tooth and nail to make sure that it still is that tomorrow. This is purely about a capacity increase. There's no other opportunity like it in the near future. The process-based part, frankly, this could go away if we just decide to make it go away. I realize it can go both ways. We decide not to do it and miss out on the capacity increase, but I've stated why I think we shouldn't. And on the other side, we could just take it and we can do it and have it happen today. It's not about any takeover. It's not about slippery slope of other types of changes. And even the process isn't that bad. So anyway, that's my view on Segwit2x right now, and I'm happy to take any questions.
Yeah, I'll start if that's okay. So one of the main things people state when they're against the 2x fork is that there wasn't a real consensus, and what Bitcoin is all about, the entire infrastructure, the entire concept of the network and the protocol is not having a person or a group deciding what is right and wrong, but having the network or all the users decide whether it's right or wrong, and putting the technical aspects aside. We'll talk about them in a second. It appears, at least from an outside perspective, that there is right now at least a strong consensus against 2x, but not but there's still a group that's not small that's pushing through. So what's your stand about that?
Sure. Well, I think consensus is critical. So let's just get that on the table. And I am concerned about, do we have enough consensus for this? One of the challenges Bitcoin has, being decentralized and fairly private, is, how do you know if you have consensus or not? And we've certainly, Alex has been on this, watch this. You come up with an idea for how to move things forward. You don't know if you have consensus for that. You have to sniff around, you have to interview, you have to talk to people, you have to meet people, you have to socialize the idea. And by the way, this is the same thing that happens in other types of protocols. We do need to get consensus. I think we will find out, certainly when the market votes, for sure. When we started this just a few months ago, you also have to remember that Segwit did not have consensus, right? If we had consensus around it, we certainly would have had it activated and enabled far sooner than we did. Now you could say, oh, that's just those pesky miners that were holding it up, and we had complete consensus from everyone else. Maybe. This is this problem of it's very difficult to measure in a trustworthy way, who's in favor and who's not in favor. So consensus is hard, and consensus is critical, and yeah, we're going to find out if we have it or not.
Alex, the next question is for you. Why do you think the current blocks on the network seems to be quite full? So why do you think that increasing the block size to 2 meg right now is not a good solution?
I think that question kind of answered itself a little bit. I said earlier that I think it's a problem if the perception of people for how Bitcoin works is that when blocks get full, that's bad. Of course, everybody wants fees to be as low as possible, and the ease with which you can get a transaction confirmed in a reliable time period to be as easy as possible. But I think the whole design of the system is for blocks to be full. It's unknown, I think, what the stable equilibrium is, or what technology will allow us to get to as to how much on-chain transactions are going to cost. I'd argue that if we rapidly approach, if growth is proceeding and then we reach sort of capacity limit and we don't have other alternatives and we sort of run into a wall and prices shoot through the roof, that's a bad thing. So, but saying that that's the same thing as blocks shouldn't be full is very different. There needs to be some pressure to move things to different kinds of solutions. And I think, we're now, I'm very happy that Segwit was activated. I think we'd be in a much worse place capacity-wise if it wasn't right now. But I think we are good for some period of time. But you know what? Mike is right about one thing. It does take a long time to get a capacity increase through. And even if we don't need another one for another year or two, we're kind of late to be starting on that right now. That's one of the things that worries me, because I don't feel like anyone has actually tried to do it the right way, where you sort of lay out a proposal and build support. The way he was asking people to support it there, I thought was fantastic. That's how it should be done. But it shouldn't be done while there's a clock ticking on rules that are already going to activate.
Mike, you mentioned, that if we don't do this now, it might take us another year or 2 years for another capacity increase. Why is that? If what Alex said right now, if people can agree on, as long as there's no ticking clock, why not sit around and talk without a ticking clock and increase the size in, I don't know, like 3 months, 6 months, where you'll have more support behind it.
Yeah, well, okay, so why is it? I'm just basing on past data. I mean, it seems pretty clear from the last few years that it takes a long time to get things through. And I think that's mostly a human factor. It's the consensus part, which is clearly the most time-taking, even though sometimes technology is hard to do and test and all that. Getting everybody on board takes even longer. The second part of your question, why not delay and take longer? Well, there's a current set of code which has been locked in, which had a 3-month time frame on it. Personally, I'm not opposed to taking another 3 months or 6 months to do it. I mean, if this doesn't go through properly in another 3 or 6 months, and then everybody has enough time to get on board, and then we'd want to do it, that'd be great. I'm okay with that. But I think we have the opportunity to do it now as well. I guess we're going to find out exactly how close we are on that.
Okay, so we spoke a little bit with Alex before you joined about I would say the public implications of all these forks, and having a lot of people with different opinions, including people from your own company that object to the fork. How do you deal with the way that all this, I would say, debate affects the community? Do you think it hurts the value of Bitcoin? It hurts the perception of Bitcoin towards newcomers?
All right. Well, let's see. There's 3 questions kind of in there. Yeah, I think there's a lot of negative debate out there. I wish we could curb that. Bitcoin has a lot of folks that are anonymous, sometimes for good properties, sometimes for not. It does allow them to create a voice that they don't have to actually be held accountable for. So I wish that would go away. I wish we could come together a little bit more maturely in most cases. But that's going to exist. That's the world we live in. The second part is the internal debate. I've had pressure from CEOs in the industry to say, hey, get your guys in line. And some people have other opinions. They say, hey, Ben's really strong, and so of course he's not going to allow that. That's actually probably true too. But if you want to have freedom, you have to have debate. So how do you have the best ideas coming to surface if you can't, kind of stand the heat of the debate? So the IETF codifies this very clearly. When people participate in the IETF, oftentimes they're coming from companies. They're coming from Cisco and Microsoft and Google, et cetera. But they have to check that corporate sponsorship at the door, and when they vote on protocol issues, they represent themselves as individuals. So I think it's a healthy thing. I think that's what you have to have in order to get the best solutions built. And that's what we want to embody at BitGo. So going forward, we will always have that. I hope other companies kind of come to that as well, and it becomes less of a my company against your company. I don't buy into any of the conspiracy theories of the various companies. I think we just all have kind of our different cultures. But then lastly, I also want to give you an example which goes back to the 90s. And hopefully this provides some optimism for going through this fork, regardless of how it turns out. You know, this isn't the first time that protocols have had to fight the centralization versus capacity issue. You know, back in the 90s, there was a huge problem. Routing tables filled up really fast, and the routing protocols of that era basically just consumed massive amounts of memory. So you now ended up having a few people that could afford these expensive routers that had like a whole 2 gigabytes of RAM and could hold the routing tables in memory, and others that wanted to kind of federate it out. But geez, if you federated it out, you kind of create these central hubs of routing information, and that creates a bit of a centralization effect. And so does the entire internet lose its decentralization and decentral properties? So at that time, the fight was vitriolic. The protocol developers were completely divided, and the debate was very similar to what we have today. Exactly, capacity versus scalability and centralization. I mean, you know, well, we got through it is the long and short of it. Eventually, it just got pushed through. We ended up, yes, having to change the protocols. I think it was Sprint, actually, that pushed forward and just kind of deployed. And in the end, the community came back together, and even though everyone had been on opposite sides of the fence prior to that, people were able to find kind of some common ground and just move forward with making the internet great. I believe that will happen now. We have a healthy, vibrant community with Bitcoin. We have a fantastic product that offers the best type of money the world has ever seen. In spite of the arguments you read on Twitter and Reddit, we actually all want the same thing. We want Bitcoin to be great. We want it to be decentralized. We want it to be more decentralized. We want to work on it together. We want the miners to be successful. We want the businesses to be successful. We want the end users to have sovereignty. We want these things. That's what makes Bitcoin great. We will get past this once we're over the fork.
Okay, so one last question. That's for both of you. Because you know you're in the Bitcoin community from very early stage, and you've been seeing this whole cryptocurrency ICO wave going on right now. From with all different opinions on whether it's good or not. As strong Bitcoin supporters and what it stands for, what's your take about what's going on right now?
You mean with ICOs or?
Yeah, generally with ICOs mostly.
So in my view, Bitcoin opened our eyes to the idea that we can create our own forms of money, and it's proven it for 9 years now, and it's continuing to prove solid. And as we've opened our eyes, it is going to lead to a wave of innovation around currencies like Bitcoin or the underlying protocols like Ethereum, which tackle smart contracts. And it's also going to start to unlock other types of assets that we haven't been able to digitize before. And so I think that's what's happening. Now, some people try to say, hey, look, if Bitcoin doesn't get on its game, it's going to lose it to Ethereum and all this other stuff. I think that's not true. I think what's happening is we're in a massive period of unlocking value. That is, by digitizing monies and assets of all kinds, we're just making the economies bigger. So Ether is additive to Bitcoin. Zcash is additive. Will these things kind of go up and down over time and in cycles? Of course. And new ones will come out which offer new features. And if a new form of money comes out that is materially better, of course people should switch to it. So ICOs are a new wave of kind of trying to digitize assets. I think there's some funkiness in there. They're going to run more into regulatory problems than some of the previous digital assets. In my view, I love the innovation. I don't know which ones are going to come out on top or which ones aren't. I wouldn't even try to predict. But I love that we've unlocked the value of these things and we're able to start innovating in ways we've never done before. And that's all thanks to what Bitcoin started.
Alex?
Yeah, I mean, I agree a lot with what Mike said there. I agree that Ethereum and Zcash are additive to Bitcoin. I'm glad these things exist. But I have a bit of more general unease with what's going on, I think, than he expressed. I think it's right that you have to have all this experimentation and you have to have 95% plus of them be failures in order to discover the new things. And so maybe that's good, but I just worry that there's so much mania and so much hype that people will be investing money that they shouldn't be investing, losing money that they can't afford to lose, and that there's a little bit too much of unethical behavior in the space. And as a free market person, I kind of hope we do a better job of, I don't know if I'll call it regulating that, but keeping that in check ourselves before it really causes a big problem.
Okay. Lou, do you have anything else you want to ask?
No, look, I thought this was a great call. A lot of, one of the things that I really took away from this, not being as technical, is at a macro level, both sides want the same thing. They want what they believe is best for Bitcoin, and so this is the healthy debate that ecosystems are going to need to learn to deal with, right? I think we're so in the very beginning of all of the other changes that's going on. Governance is going to be a whole science. How these things are governed, the rules that are overseeing these things, and it's incredibly shocking how amazingly good Bitcoin is after 7 or 8 years. It's like democracy; it just keeps on working.
Yeah. So with that note, I'm happy that I see that we found a few things that both sides can agree on, and I really do agree with you. And I think that this is a healthy debate, and I assume that in a couple of weeks, a little more, we'll see which side takes more support, but that also might change in the future. But I hope that at least our listeners learned a little bit more about what's going on and why each of the sides thinks their stance is important. And I want to thank you guys, both Alex and Mike, for joining us. And good luck to you both.
Yep. Happy to do it. Thank you.
Thank you. Bye-bye.